Ralph Acampora is a pioneer in the development of market analytics. He has a global reputation as a market historian and a technical analyst. In fact, he expressed his concerns about the market in January of 2022, which ended up resulting in a 27% decline by the end of the year.
And I've been saying ever since that the market has made a bottom.
Let's hear about what he is expecting for the financial markets in 2023.
Or what are you thinking?
I think we're in the early stages of a new bull market. Obviously, nothing goes straight up without a pause, a pullback. The year 2022 was a difficult one for everyone. And that's basically because of the global situation that we have. Recession, the debate about interest rates. Unfortunately, this war in the Ukraine has a lot of people very, very justifiably concerned. So, the stock market reflects all of that, of course, and across the board, we've had a sizable sell-off. That's the bad news. The good news is that I think the important date, especially when looking at the Dow Jones Industrial Average, was October 13th. We in the technical world would call that a key reversal day, an outside day. Do you realize that the Dow had an intraday swing of over 1,500 points in one day? And I looked at that as, wow, that seems pretty climatic to me. And I've been saying ever since that the market has made a bottom. And if you look at foreign markets, especially in Latin America, they're all doing extremely well since then. And it's European markets, Asian markets, they're actually leading the US market in a technical basis, because they're higher than their December highs. And but I'm very enthusiastic. Obviously, it'll be very, very choppy. We'll have more fears of higher rates and stuff like that. But I'm not worried about that longer term. I think the markets around the world have bottomed. I think we're in the early stages of a new bull market. Obviously, nothing goes straight up without a pause, a pullback, maybe even a shock or two. This week we had earnings in the United States, and boy, you had this sharp sell-off on Wednesday, but it reversed by the end of the day. So the market is willing to absorb some negative news. I'm impressed.
Okay. And what are you technicals indicators, or are you looking at right now when you're evaluating those markets?
I'm very simple guy when it comes to technical analysis. Price is everything to me. Indicators are important, of course, but you don't own the RSI or the MACD indicator. You own price. And what I've been talking about is the action of price action more than the indicators. Although if you look at the MACD and the RSIs in a lot of these markets, they're in a positive mode now, daily, and some of them are starting to show encouraging signs on a weekly, maybe not so much on a monthly basis yet, because that's longer term. First of all, it started with two young analysts, myself and a fellow by the name of Johnny Brooks. And we were part of the New York Society of Security Analysts. We were in the junior members of that organization. And I have to say that was dominated by fundamental analysts and economists, et cetera. And they didn't look too kindly on us because we were just playing with paper and charts, and technical analysis was not respected in those days. Although there were good technicians around, but the subject itself was not solely was not accepted in the same manner as it is today. And Johnny and I were kind of jealous because we saw these fundamental analysts that had breakout meetings. They would, like the auto analyst or the chemical analyst or the drug analyst would have monthly meetings, and they would talk about their sectors and their industries. And Johnny and I said, well, gee, wouldn't that be great if technical analysts did that? And that was the start of the Market Technicians Association. We just wanted to sit down with like-minded people and talk about our subject and talk about the markets. We had no idea that it would last 50 years. And unfortunately, Johnny's no longer with us, but I'm sure he's looking down from the chart room in heaven and saying to me, yelling down, Ralph, 50 years, this is amazing, and we're very, very excited about it. And but you know what, when I go to the seminar in April, we're having it in New York. And by the way, you should come. It's going to be a very exciting time. You meet a lot of old timers and new timers, and it'll be fun. I can't wait to tell them that the original mission of the organization was to educate each other. And today, the public still doesn't have the knowledge of technical analysis that they didn't have years ago. We have more people following technical analysis today. In fact, when you're listening to the TV commentators, the business commentators, a lot of them are talking about support levels and Fibonacci numbers and things like that, which is encouraging. But the viewing public still needs to be educated. And that's why the CMT program is so important. And I'm so glad to see and hear of what's happening in Latin America, because more and more people are taking the exam, and they're really, really getting the backing of what that real knowledge is all about. In 1995, I wrote a report called Dow 7000. And the Dow at the time was just about 4,000. And everybody thought I was absolutely crazy. How could you make a forecast like that? Well, I just didn't make it up. I remember my first evening meeting at the new organization, the Market Technicians Association. The first dinner meeting that we had, I sat next to the oldest technician I ever met in my life. His name was Ken Ward. This is 1970, and Kegman's close to 80 years old. That meant he lived through every bull and bear market in the 20th century up to that evening. So I leaned over and I said, Mr. Ward, sir, what was the most difficult market you ever had to write about? I said, oh, forgive me, Mr. Ward, that's a stupid question. It has to be the crash of 1929. With a grovelly voice, this little old man said, no, don't get me wrong, Ralph. 1929 was bad, but that wasn't the worst market. Excuse me? He said, the worst market for me and most technicians was the early 60s. I said, but Mr. Ward, it went up. He said, yes, and no one believed it. I never forgot that, Juan. And 25 years later, here we are, 1995, and the market's moving up. I have on the cover of my report, is the Dow going up 900 points without a correction. I said, have we seen this before? And said, yes, it was the early 60s. And when I did my homework, I went back and read every Wall Street Journal every day from 1960 to 1966. And you know what I found was common? That we had low inflation, low interest rates in the 90s period. And that was the theme of my market letter. So the most exciting day for me was when the Dow hit 7,000.